3-to-1 declining to advancing stocks. Week open, and we're not really rallying at all. But it's even worse in Europe. Take a look at the European autos. Germany is the weakest part of Europe. That's understandable given the concern about Merkel's coalition there. But just like industrials are proxies for the trade war here, autos are sort of proxies for the trade war over there. And it's not just German autos like Volkswagen or BMW that are weak, but right across the board, Rolls-Royce, Porsche, Renault, it doesn't matter what you look at. These are proxies for the trade war. All of them are notably weaker. Here in the United States, as I mentioned, 3-to-1 declining. Not much leadership. Energy's the exception, though. Oil has rallied a little bit. It's been a little weaker recently, and some of the energy names are up nicely today. Seems like there's some rotation today into that group. Industrials, they've had a little problems. They're the proxies for the trade war. Consumer staples, you'd think there'd be a little more defensive tone, but that's not really happening. It's just generally overall down 0.6, 0.7%. The banks have not been leaders for a long time. Tech's held on very well, actually. Today, it's mostly the semiconductors that are on the weak side. So our market headwinds are simple. Remember, it's not that we're weak. The S&P is near the upper end of the range. We were market at 2,800, which would be the old highs in March just last week. But that's maybe a bit of a tailwind at this point. Trade, of course, the concern is not with what we've announced, it's with a potential second round of tariffs on Chinese goods. Remember, 50 billion may be just the opening salvo. The Chinese have already announced retaliatory tariffs. The president said there could be more. That's the worry. A second wave might be coming here. Also, I would note these raw material costs have been rising. We've been hearing about that from a number of companies overseas. I would also note the dollar strength here. That's been a headache for some of the multinationals, although they haven't lowered their numbers, and emerging markets as well. So trade issues, I think the important thing here, if you take a look at the standard names right now, you see Caterpillar, Boeing, 3M, and David, I think, rightfully mentioned NXP Semiconductor. We thought that deal was going to be announced. It turned out to be a little premature, and I think that's also a proxy here as well. Mentioned some of the weakness in tech. It's primarily semiconductors. Intel is notably weak here at the open. Look at that right there, down 3.95%. That's a big one. Lam, Lattice Semi, ST Micro also on the weak side. Finally, just want to mention that strong dollar because this month and really this quarter, it's been an issue for all of the emerging markets. And while a lot of them are closed over in Asia, China's closed today. For the Dragon Boat Festival. Philippines, that's a 52-week low for the Philippines. Indonesia is down today. Thailand is sitting at the lows for the year, essentially. Vietnam is down about 15% so far this quarter. So this is not 1997, but there's clearly an effect for the stronger dollar. And while they're much better managed, markets overseas are generally more locally owned. They're not just foreign nationals. This was a big problem back 20 years ago. More stable. You do see the effect. That dollar does bring money home and money out of these emerging markets. Right now, we're sitting right near the lows for the day, Dow down 221 points. Carl, back to you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.